We're down at one point around 200 to 300 this morning. Those were the futures, but the market just opened now.
Okay, right now, after the opening bell, down 521 points. We see there still going down 530. We kind of expected that to happen this morning.
Yeah, we have financial expert Jeff Segelke with us again this morning. He's been taking questions from you. Now that the stock market's open, we're seeing almost 550 point loss. What should we expect?
Yeah, not surprising at all. You know, after a day of huge selling yesterday, people are nervous, you know, and as investors get scared and maybe start selling, that causes the stock market to go down even more.
Okay, so we're probably going to see the nervousness today, and this is something that could go on for the next couple, 3 days, or
it really could.
More.
It could last for a few days. It could last for a week or two, and it's just that fear that sets in. And as people start selling, again, the stock market just goes down more and more, and we're seeing that today.
And we know the market is different than our economy. But how crucial is the stock market to the healthiness of our economy?
You know, I think it's more of a psychological thing that, you know, as we see the stock market go up, we feel good. We feel like our retirement accounts are getting larger, and that creates some momentum. At the same time, it is not the economy, and the economy is still strong. Even though the stock market is weak this past week, the economy is great. Unemployment is low. Companies are very profitable right now. They're making a lot of money.
Wages are up for the first time.
Wages are up, and then with the new tax law going into effect just now, that's really going to help these large corporations make even more profits.
Okay, so let's look at the positive side of this. Obviously very emotional for those of us with our 401ks. What can we look forward to when something like this happens?
Yeah, so you're going to see your account go down. You know, if you take a look at your account, you're losing money.
Maybe don't look at it.
Maybe don't look at it. If you're a long-term investor, if this is your retirement money and you're not planning on touching it for the next 5 years, maybe don't look at it right now. Leave it alone. Because what happens with the stock market is these markets, you know, they tend to be very volatile, and it'll go down maybe for the next few days, but then it'll probably come right back up. And so you can't be nervous about it for a few days.
Yeah, and you've still made a lot of money over the last couple of years.
If you've been invested just the last year, you're still up over 20%, even with what's going on in the market today.
If you have your investment in an aggressive account, should you taper it back down to more moderate?
It depends. It depends. If you're getting closer to retirement, then maybe you should. If you're still, again, 5 years or more away from retirement, then you probably shouldn't be too nervous about this.
Okay. Don't make any change.
Well, Jeff, thank you very much for that.
You're welcome.